Hi guys, this video is called The Economy, Markets, and the Rich Getting Richer. We touched upon the concept of markets and the economy in the last weekly trading wrap up, the WTW series that I film every week, or post every week, not really film, but whatever. And we came upon the concept of the economy and markets. Okay, as traders, we are basically trying to predict the economy, like 6 months, up to 6 months in the future, so that if the economy does well, companies will earn more money, earnings go up, and their stock prices will go up. And that's what we want. We want to invest in companies that will do well. But it's easy to get bogged down in economic macro data and lose sight of the market, because the concept that I want to talk about today is the market and the economy are not the same. Okay, they are completely different. The markets, in fact, predict the economy 6 months in the future. Okay, they are the economy. When we get economic data and we look at it, it's generally lagging data. Okay, at best concurrent. So that's why we try to look at leading economic indicators when we're talking about our macro. But what we are trying to do as traders is predict the future economy, not the markets. We're hoping that the prediction of the economy in the future leads to higher markets. Okay, and the odds are great that that's the case, but it's not always a one-to-one relationship. Okay, so an example here, we're looking here at the S&P 500. Okay, the S&P 500 is at highs, near highs. Okay, the high was like 610. Right now we closed on Tuesday, the 11th of February. We closed at 605.31 on the S&P 500. This is the market that I like to look at. Okay, but if you look at the macro data, the lagging macro data, you will see that it is very pessimistic. Okay, like the average consumer, like if we look at consumer sentiment, is very low. Okay, like this is a picture of the University of Michigan Consumer Sentiment Index, which I like to look at, and this is a chart since the 1970s. Okay, so the most recent reading in December 2024 was 74. Okay, and 74 is a very low reading. Let's go. This is a 1 year chart. Let's go to a 5 year chart. As you can see, it was lower. It was in June of 2022. It was 50, which is very, very low. Okay, and it's gone from 50 from 2022 to 2024. It's gone to 74, which is still pretty low, because if you look even further back, you see that it's generally around the 90 area where the consumer is happy. Okay, now it's coming back, which is good, which we want to see this as a trend. We talked about this as a generally leading indicator of the future, but the level itself is pretty low. Okay, the fact that we are still at lows here and the market is at all-time highs goes to show you that even bad economic data, or economic data that is not at highs, could still lead to the market being at highs, because the market is anticipating that this will go even higher, okay? And the economy will go even higher. So that's why you have to understand that, make a big mental shift in your attitude, is that the economy and the markets are not the same. So when you see economic data, don't think that it will translate to stocks, okay? Because the stocks are the leading indicator. It's the leading indicator of the economy. Okay, and we saw that when we looked at the UK, what is it, the FTSE. Last WTW, we looked at the UK, and we saw that here there was a consolidation and it broke up. Once it broke up, we know that it was going to go higher. This is the stock market. But if you look at the UK economy, it's doing worse. Okay, it's getting sort of deflationary. The numbers are not great. But why is the market going up when their numbers are going down? Well, it's because the central bank, Bank of England, is lowering rates, and the market is anticipating that this lowering of rates in 6 months' time will lead to a better economy, higher earnings, which will translate into higher stock prices. But the stock price move is done now. Okay, so Like if you're just an economist or just a macro guy, you have know nothing about market, you would say, what the hell are the markets doing at all-time highs in the UK when we're at pessimistic type levels in the consumer and the economy at this moment? Well, because the market's forecast. Okay, there's a difference between markets and the economy. Okay, we saw that in the DAX as well. The DAX market's at highs, yet is Europe doing great? No, Europe is pretty much struggling. They're doing okay, barely surviving, and yet the markets are screaming like it's all-time highs. Same thing, they're anticipating Europe will come back eventually. Okay, this is why you have to understand the concept of markets and the economy are completely different. That's why we don't have economists who are great stock traders. Okay, and as traders, we are basically jacks of all trades. Jack of all trades, or yeah, jacks of all trades, I guess. We have to know a little bit about the macro. We have to know about accounting a bit to analyze companies. We have to know about themes and trends that are going on in the social environment, not just the economic environment. We have to understand what makes a good company, not just the accounting aspect, but their key performance indicators, etc. So we have to know about a lot of industries. You have to know about the little bit about the let's say you want to invest in a chemical company. You have to know a little bit about the chemical industry. You can't just I just want to buy this company and just do that. At least if you want to have a fundamental background and you're not just a technical trader, you have to do that. Technical traders don't do that, okay? And as you know me, I'm not a technical trader. I mostly use fundamentals to trade, and the technicals are the added bonus to it. Okay, it's just technicals are basically used for timing. I don't use charts. I don't trade off of charts per se. I have to have a fundamental reason to do something, and I use the chart as a confirming and timing mechanism. Okay, so while yes, we do look at the chart, and the chart is basically a fundamental representation of past stock price movements, which are based on fundamentals, and it gives you a nice picture. I don't base my decisions off of charts. As you can see, like look here, if I based it off a chart, it broke down, I would be going short because it broke that key support level. Okay, but it's not perfect. 1 or 2 days breakdown is nothing. It's a fake out. It's a bear trap. Okay, so I don't just trade off of charts. You have to use fundamentals. Okay, and that's why, as traders, we have to have multiple hats. Okay, yes, you should use technicals, but they can't be in isolation. Yes, you should use fundamentals, but they can't be in isolation either. Okay, there are some good stocks that have terrible charts. You don't want to buy them when they're in a downtrend. Okay, otherwise, as traders, you're just wasting capital. You're tying up your capital for nothing. Okay, that's for investors. Okay, as traders, we do something different. We need to have our calls be right in 3 to 6 months. At least for my style, I'm not a day trader. So this is why you have to understand the economy and the markets are not the same. So also, you have to understand that the markets, they care about rising GDP, okay, but they don't care how that GDP is dispersed, okay? And this brings us to the third topic here, that is entitled "The Rich Getting Richer," because that's what's happening in the markets nowadays, okay? I've noticed this trend over the years, over the past 5 to 10 years. You see that a lot of wealth is starting to be concentrated more and more at the top. Okay, you have a lot of the rich getting much richer because they own assets, and a lot of the poor and the middle class are getting squeezed out of this market. Okay, not a lot of people own the stock market and realize this gain. Okay, I think fewer than 20% of people own stocks. I know that the poor people do not own stocks. The middle class owns some, but the vast majority of the stocks are owned by the rich. Let's call them "quote unquote" the rich. Okay, so and I've seen that no matter what happens Western societies are more equitable than if you go to like an African dictator would have all the wealth in his country and everybody else would be poor. Okay, so we do have a middle class in America and in the Western countries, but I've noticed a trend recently is that this market is siphoning a lot of wealth up to the top, okay, and it's squeezing the middle class and it's squeezing the poor a lot. Okay, and but the market doesn't look at that. Okay, the market just cares that GDP goes up, companies are making money. That's it. It doesn't care if that GDP is concentrated in one man. If one company that controls the economy, let's say, had all the GDP growth, and the market will go up, the stocks will go up. Okay, like it doesn't care about who gets that wealth. It just cares that that wealth is created. Period. Okay, so it has no conscience. The market is amoral. Okay, it only cares about growth, 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 earnings, 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 earnings. It doesn't care that, I don't know, the top 1% have all that growth and all that earnings, or the majority of it, or 80% of it. Okay, so it's not a morality play here. Okay, as traders we try to put that aside, but as as human beings, we see the fact that this is not. We don't want this trend to continue. Okay, we don't want to see. We don't want to see the world's first trillionaire. Okay, that is not a good thing, because that just shows that it's more money printing. Okay, that is being created in this market. We want to have a market where everybody shares in the wealth that is created. Okay, um, and a typical example of how the rich are getting richer and leaving behind sort of the middle class and the poor is a company that I've traded in the past. It's a good company. You guys should check it out. It's TKO, TKO Holdings Group. Okay, I've traded in the past. I wish I should have. I wish I would have held longer, because now it's getting parabolic. But this company is TKO Holdings. Okay, they hold basically the WWE. They hold the UFC. I love the UFC. It's one of my favorite things. I used to wrestle and do some MMA in my youth. So I can see that I can see the growth in the UFC ever since the 90s. Okay, and you can see what a tremendous company it was. Okay, but what I'm trying to get at here is that TKO Group now owns the WWE wrestling, which is another great company, and it owns the UFC. Okay, so what is TKO Group exactly? So here I'm on Wikipedia. Okay, TKO Group Holdings. It says they own the World Wrestling Entertainment (WWE) and they own the Ultimate Fighting Championships. Okay, and those things are going gangbusters. Okay, and the owners, I know who bought the UFC a while ago. It was Endeavor Group. Okay, and Endeavor Group, the Endeavor Group is right here. Is owned by Ari Emanuel, who owns Endeavor Group, who owns the UFC. Okay, they bought the UFC back in the day for like $4 billion, which was a high price at the time, but now it's worth way more. So it was a good deal. However, this is what I want to talk to you guys about when it comes to like the rich getting richer, because they want to buy I'm going to say that Endeavor Group, okay, is the rich. Okay, I'm using that as an example, and they're buying assets like the WWE and the Ultimate Fighting Championships. Okay, but I want to separate that. I want to separate, quote unquote, the rich from the entrepreneurs that started the UFC and WWE. Okay, and if you go back, let's go with I'm more familiar with the UFC. This is Ari Emanuel. He's the CEO and executive of TKO. But I know more about the UFC portion of it. So let's talk about the UFC. Do they mention it here? Well, let's see here. Here, the Ultimate Fighting Championships. Okay, it was started by the Gracies in 1993. I remember that. First UFC event was held in 1993. And then it was bought by Zuffa, which was Frank, and yeah, right here. In late 2001, it was bought by Zuffa, which was by Frank and Lorenzo Fertitta, the Fertitta brothers. They own some casinos in Las Vegas, and they bought the UFC. Okay, in 2001. I can't remember how much they bought it for. Maybe 10 million. It was a very small amount. However, what I want to know that these guys, the Lorenzos and Zufa, these guys are the entrepreneurs. Okay, they're the ones who take the massive amount of risk by investing in this. Okay, I mean, when the Gracies first founded it, they were getting bankrupt. It wasn't mainstream. It was only the crazy people like myself who like to watch it. So, and it was always going to go bankrupt multiple times. It was then bought by Zufa, with the Fertitas, and they almost got bankrupt multiple times. They kept injecting money into it. I think they put maybe another 10 million. Don't quote me on this. This is going by memory. So the Zufa organization, the Fertitas, putting tens and 20, let's say 20, 30 million into it, and they were going to go bankrupt until I remember it turned around when they started the Ultimate Fighter show, and the finale was Forrest Griffin and Stephen Bonner, and they made a Rock'em Sock'em Robots type of fight, which was extremely exciting, and that was the turnaround of the UFC. They started becoming more legitimate, changing the rules, making it more palatable for middle America to watch, because at that point it was still crazy people like myself who like to watch fighting and like Pride and Ultimate Fighting and all these crazy no holds barred, no rules type of events. Okay, in the beginning, remember, it was illegal here, and they used to have to hold it on Indian reservations or in places where it would circumvent the laws, but in 2001, the Fertitas bought it and turned it around. Okay, and then they bought Pride in 2007, so they started and Strike Force in 2011, so they consolidated their empire. Okay, but it wasn't until they sold to Endeavor Group for $4 billion that they cashed out. Okay, and they bought it, I think it says here, in 2021. Okay, they bought out the full amount, the full Endeavor Group is they bought it out in 2021. So from 1993, 2001, 2021, 20 years, the Zufa run it, the Fertitas run it, and they sold out for $4 billion, if I'm not mistaken. $4 billion. Okay. But my point is, the entrepreneur is different than the rich guy who comes in at the end and buys it. Okay, the entrepreneur took a massive amount of chances. Okay, they bought it for, let's say, 10, 20, 30 million and cashed out for 40 billion. That's like, what is it, 200x? I don't know, you guys do the math. Okay, I don't have it in my head right here. But if let's say it's 40 million and they did it for 40 billion, that's, 1,000x your money. Okay, that's the kind of return you can expect as an entrepreneur. Okay, but my point here is that the rich, i.e. Endeavor, they don't care about taking chances. The entrepreneur came in when it was an unproven concept. Okay, and they turned it through blood, sweat, and tears and 20 years of almost going bankrupt into a 1,000x business. It could have gone bankrupt easily at any point. Okay, they take the chance. The rich come in, Endeavor comes in when it's already the proof of concept has already been passed. And they come in and buy it for $4 billion, and now it's worth what, $6 billion? I don't know. They're just making a 50% return, which is still pretty great. And if you look at the stock price here, it looks amazing, but that's nowhere near, for 2021, they bought it at $4 billion, maybe they doubled it. Maybe it's worth 8, 10 billion, who knows? But it's not 1,000x. Okay, it's not 1,000x your money. Okay, so this is the differentiation between the rich and the entrepreneur. The rich comes in and now just has assets, and now they're just earning from it and gaining control. It's more about control and dominating the game. And that's why when you are the rich and the CEOs, the entrepreneurs have long since cashed out. Maybe they hold a little bit if they bought some in the public markets, but the real owner right now is Endeavor. Okay, it's quote unquote TKO. Okay, it's the company that owns it. So the Endeavor owns the majority of it, and they are the owners of this company. Okay, so the owners are now consolidated. So now and Endeavor, by the way, before they owned their Hollywood agents. Okay, they owned a lot of agencies. I forgot the name of the agency that they started, but they own agencies. They own Hollywood contacts. Now they have and they were one of the biggest, I think the biggest agency. Okay, so they dominate. Just like they own the UFC, which dominates MMA, they have a monopoly in MMA. And just like the WWE, they have a monopoly in wrestling. So the rich just care about acquiring monopolies, okay, increasing the empire. And that's why a lot of the wealth now is being, this is just an example. TKO is an example that I thought of, but there are many examples of how the wealth is being concentrated over time, years and years and years, into few hands. And those few hands don't care about taking risks like entrepreneurs. They care about acquiring assets and dominating. Okay, so that's what I mean by the rich getting richer. Okay, and it's I guess it's capitalism, but if you take this to the extreme, you're gonna see like a few people are gonna dominate everything. Okay, and this reminded me of a game that I used to play when I was a kid. Okay, and that game, I don't know if you guys are familiar with it. It's dating. I'm being dated here, but that game is called Taipan. Okay, who remembers Taipan? Okay, this game came out like in 1980s. Okay, I was playing it as a kid. Okay, it's a game based on the Chinese trade of the 1800s. This is a junk. You buy a ship. Okay, and I downloaded this in the more modern version of it. Okay, if you guys want to see it, it's here. Okay, this is what it is. Okay, Taipan is basically a game where you have a ship. Okay, and you can buy opium, silk, arms, or general merchandise. Okay, in your ship, and this is your warehouse, and you go around different towns, different ports of call, and you try to buy goods and sell them. Okay, like if we want to start a new game here, you can start a game with no cash and debt, no cash or debt, but with 5 cannons. It's sort of, I don't know if you guys can see it, but it's very slight. But I can't maximize this. It has to be this size. Okay, so let's just start a little game here to show you what I'm talking about. Let's call it Harry, and we'll begin with cash, no cash and debt, and no cannons. Okay, so now as you can see, we are in Hong Kong. This is our ship. It's January 15th, 1860. The price of opium is $21,000 a unit. Silk is $2,500. Arms are 90, and general is 14. This is the status of our ship. We can get killed. We can get killed. This gets reduced. Okay, and we have here the bank and debt of 5,000. And let's say we leave port. Okay, we can go to any of these. We can go to Shanghai, Nagasaki. Okay, let's go to Nagasaki. Okay. Going to Nagasaki, oh, we're being attacked by 4 pirates, okay? Since we have no cannons here, it says cannons, there's 5 ships, we better run. Okay, I will run, let's see, we got away from them. Great, okay? Now we're in Nagasaki, and the price of opium is 22,000, the prices of silk, of arms is 240, that's a pretty big price. You'll get to see what a large price is and what a small price is, okay? But the point I'm trying to get with this game, you can try it, you can download it, it's pretty fun. Okay, you can buy merchandise, go around, see what happens. Okay, but the point is that at some point, okay, in this game, you become so powerful. Okay, your cannons, you'll have like 100 cannons in your bank. You'll have $1 billion. Okay, and once you get to that point, okay, like your goal, you become an opium trader eventually because it's the most expensive item, and you can make. In one trip, you can make like $100 million if you have enough cargo hold. You can make $100 million over the course of 3, 4, 5, maybe 6 months. Okay, each turn is 1 month. Okay, but if you get to the point where you're so rich, you have $1 billion or $10 billion in the bank. Okay, every turn that you make, you're going to make like 0.5%. So every 2 months you make 1%. So you're making it with 10 billion, you're making $100 million every 2 months. Okay, that's more than you can make trading opium. So at this point, you're just dominating everything, and nobody can kill you because you have like 100, 200 cannons. Okay, the point I'm trying to make here is that it gets to a point where it's ridiculously stupid, where you're just making money from interest on the bank. That's it. You dominate everything. Okay. And that's my point. Like, it's a Taipan phenomenon. At some point, eventually, the rich here will start dominating and just making money off their dividends owning assets that have virtual monopolies in their industries. Okay, now I'm not saying it's gonna get to that point. I mean, it will if nothing happens along that road. But that's a linear think. That's linear thinking, and it might happen that way. Who knows? Or something might disrupt it. You never know. But if we, if life is like Taipan, okay, then eventually one person will rule it all, or a few people will rule it all. And we don't want that, okay? This is the danger of the rich getting richer, okay? We don't want that to happen, okay? And that's why as a trader, you're making money, okay? The S&P 500 is going up, we're making money, but do we really want to live in a world where it's dominated by a few people? Do we want to live like in an authoritarian African country where one person rules it all, or his cabal, him and his friends, or a few people own it all, and everybody else has nothing? I mean, we don't want it to get to that point, okay? That's just a danger of it, okay? And I know I'm getting into like the political realm here, and I don't want to continue forward, but this started off as a small video on the difference between the economy and the markets. But as traders, we're looking not just at the economy and markets, we also look at politics. We also look at everything that could affect the markets, everything that could affect our trading going forward, and how fundamental shifts in the economy and in society can have, as of course by society I mean political society and politics, because what is life if not politics? That affects our trading, that affects everything, okay? So we have to also be aware of the societal impact of what we are doing. And I'll just leave it at that. Have a nice day, guys.